Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, April 26th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice the ES with another narrow overnight range heading into the RTH Open. This is becoming a pattern here, where for the most part we've seen a lot of action in overnight and pre-market trading for the vast majority of the last year in many cases, but just in the last recent week or so, maybe 2 weeks, we've seen a lot of narrow overnight ranges, especially over the last 5 days or so. What's occurred is after these narrow ranges have developed early in the session, we've then seen an aggressive move to the other side of the range, and then we kind of sit the rest of the day. So for example, the last one that occurred was Friday, right down here, and then it broke to the highs and closed higher. Before that, it was right here Thursday and then closed lower. And then there was one here heading into the Wednesday trade and higher, and etc. Now we're up here at the top of this trading range. Are we ready to break out and go? Or are we about to see this range break to the downside and rotate back to the other side of the range on an intraday basis, 41.15 to 41.20, maybe as shallow as 41.30. But at the moment, we're sitting right at the top of that range. The other deal here is that we're looking at an upward sloping channel here, and we're kind of at the upper end of that channel right now, right? We're at the upper end here at a cycle high after that strong low that we identified several weeks back. That strong low led to a rally over 3 weeks, followed by sideways over a week or so. Are we about to see a bit of a pullback here that could get us going to the next round of highs? So that's something to consider here. So right now, intraday key range, keep an eye on 41.62. A break below that zone could open up some weakness back toward 41.30 or below on an intraday basis. Overall, this market continues to trend up. But if we see one of these big down days here to begin the week, that could trigger at least some selling pressure back down toward 40.50 or perhaps even lower. All right, let's take a look right now at the NQ. Now the NQ is also developing a narrow overnight range right now, 38% of ADR, whereas the ES is currently at 29% of average range. The NQ is also narrow, sitting right at the previous week's midpoint or just above it. If it fails to hold that midpoint, or it's 13,875, or perhaps even a little bit below it, 13,860, that could open up again a rotation back to the bottom end of the recent trading range. Again, 13,900 has been a very important pivot. That's the key high right there. It's traded exactly above it, exactly below it. You can see how 13.9 has been either the high of the day or has been the final print of the day, the high of the day or the final print of the day, and now we're trading right at it with a normal range. So it continues to be a key level on an intraday basis and also kind of a higher time frame basis. The trend remains to the upside. We did get this major breakout right here to the upside, so to me that favors that any pullback still remains a buy for a continuation higher toward 14,500 and 15K. All right, let's take a look right here at crude oil. Now crude oil is currently down 1.87%, 1.85% right now. That's pretty significant here early on in the day. Crude has traded in a very curious manner here recently, where we've seen a lot of sideways price action here. Then the sideways range got even more narrow. One breakout day, and then the price range shrunk tremendously. One outside day, and now we've been in a range again for the last 4 days. So we've really been range bound a ton in crude oil. We haven't seen many transitional days where we try to get from A to B. What we did see though is one push into 64s here, which is right where the breakdown point occurred back here. You have your box up here, and that thing rejected that area right there, and in doing so, that could lead to another round of weakness back toward these recent lows or perhaps even below there. So that's a pretty significant rejection to keep an eye on. Right now we're inside the trading range. Again, fading new highs, fading new lows at the edges of these ranges, probably the best way to go. So anything into the overnight low could be an opportunity to reject and fade it back up. On an intraday basis, this thing is trending down, but again, shortly we could find some sort of rejection at the edge that could bounce this thing back up. All right, let's take a look here at gold futures. Gold is currently down about 1/3%. It is pulling back within the uptrending channel here. So you have basically this range right here that developed. This move right here failed to reach this low, rejected, pushed through that high, and then pulled back with a higher low and went. That was really solid. It got within 1.6 points of reaching that 1800 level right there. It's now pulling back over the last 3 days, and I mentioned before we could pull back as deep as 1750 and still be a good buy opportunity for a continuation higher toward these upper targets. So early this week right now we're seeing a bit of a pullback. Previous session's low could offer an opportunity to reject and fade it. You also have again as low as 1750. So right now looking for signs of a rejection after this early weakness this week. This could provide an opportunity to reject and turn this thing back around. 1820 to 1825 could be up above, and then 1875 could be the final target over the next couple of weeks. All right, that is it for now. We'll see how this plays out heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.